Friends, what's up? We've been waiting for Ezgo results and they finally came out. Let's check them out and see if they're good. So the revenues were at 23.4 million, an increase of 54%. Okay, I was hoping for 30 million actually I was hoping for, but okay, a little bit less than I expected. For net loss, we have a net loss. I was expecting for a profit. Compared to 0.3 million profit, we had a 3.4 loss. This is bad, primarily as a result of increased cost of revenues and operating expenses associated with the new hires and marketing. Okay, this is bad. This is not good. And in terms of cash and cash equivalents, they had 7 million, now they have 5 million. So they're burning cash. They would have, you know, like a year time for cash. Then they would need to get this money, you know, to raise cash, which for them would be very difficult in the current bear market with rate hikes. So yeah, bad results, guys. Bad results. Well, I saw the markets, the pre-market for Ezgo was at 8%, but this was yesterday, the aftermarkets. Let's see how it trades today, but these results are not very good. The revenue progression is very good because we were like at what? We were like at, you can see here, we were at about 15 million in 2020, 5 million in 2019, 3 million in 2018. But the thing here is that we had a profit here. Okay, so here we had a beautiful 2 million profit, and here as they shifted, because they were doing only batteries. So in 2019, you can see here that they were only doing battery rental and battery trading. They were not doing any bike sales, or almost nothing, like only 2%. And then once they went into the bikes, bike business, they completely lost in profits. Maybe because also they're ramping their production. Let's hope for that. Let's see the what are the comments of the management. So Chief CEO of Ezgo stated, "We are pleased with the progress we have made during fiscal year. Major turning point, we became public. Okay, all this we know. We reported solid increased sales of e-bikes." So basically e-bikes, we will see how many units they did, which are attributable to ongoing development and launch of high quality products of which were possible. Okay, all this is blah blah. Demand of our remains strong. Okay, this is good. We are working to increase production capacity. Our current facility is at 200,000 units. In the next couple of months, they will do 200 units, basically. So right now, I was counting, if they did 18.2 with, they did probably 81,000 bikes, because we had another results here where they had made 34 bikes in fourth quarter 20 and first quarter 21. And right now, basically, they didn't have a big progression. I was hoping that they would have a big progression here, but they, in the fourth quarter 20 and first quarter 21, they made 34,000 bikes, and in second quarter and third quarter of 21, they made 42 bikes, and that's a progression of 38%. Well, that's not nothing. That is not nothing. Okay, 38%. Yeah, that's a good increase. So basically, if we add 34 and 47, we get 41. So right now they are producing 41,000 bikes, and they're saying that they will soon, in the next couple of months, have a ramp of 200,000 units. This is very good. This is very good news, because that means that if they will be producing, so if they are making 18, so basically, what is this? Okay, this is in percent, that's why. If they're making 18.2 million and they have 82 bikes, if they will make 20,000 bikes, 200,000 bikes, sorry guys, they will be making a sales of 44 mil. So 45 mil. That's a PS of 0.3. So 3 times their sales would be 3 times more than their market cap, current market cap. So last November we were excited to announce the launch of the bikes. Okay, this is okay. Okay, let's check this out. Net revenues from continuing operations were approximately 23.4, a 53 increase from approximately 15.2, significant increase, mainly driven increase of sales of e-bikes, which was a result of reduced unit prices, and increased advertising. So basically what they're saying here is that they sold more bikes, but at a lesser price, and they increased advertising for it. That's why they're saying that, you know, they had more expense, so more expense selling this e-bikes cheaper, and at the same time they increased advertising. That's why they were down. Basically, this is why they're down minus what? So that's why they have a loss of 3.4 because of this two things. The following steps, okay, sales. We have sales here by segment. So we can see that they sold a lot of, almost doubled in the e-bicycles. So battery cells and pack segment went up a little bit as well. Okay, 20%, and that others went down 6%. Okay, that's good actually. That's pretty good. E-bicycle sales segment mainly engage in offline sales for the fiscal year. Okay, we're 18. Company the sales are managed by the impact of since second quarter of 2020 revenue from battery cells and packs. This is where they would get their margins basically, and their profit in the pack segment. Was a 36% increase from prior year. I said 20% previously, but it's a 36% increase, which is very good. Cost of revenues of the fiscal year were 23, an increase of 68. Okay, that's huge, cost of revenues. The increase was primarily due to increased manufacturing, so they're ramping production, and purchase costs of e-bicycles, increased purchase cost of battery packs, increased costs associated with sales provided to distributors and wholesalers. Okay, gross profit. We were positive, in a positive zone for gross profit. Okay, it's a very small profit, but still is a positive gross profit. Selling and marketed expenses. Okay, that's where they basically killed it. Where they had a lot of expense, selling and marketing, primarily because of salaries and benefits expense, advertising expense, and freight expense. Selling and marketing increased to 1.6 million from 0.4 million primarily due to expenses related to hiring of additional salesperson and marketing costs to promote sales. Okay, let's hope this will not this will not expand. They will not have more expense in the coming. I mean, this growth of expense, from 0.4 to 1.6 is a fourth. I mean, it's what, 1.6 by 0.4, 1.6 by fourfold. That's huge. That's very big amount. But if they're ramping production to times 3 from 80,000 to 200,000, I mean, maybe it all depends on the context. It might be good. So general expense increased to 2.4 from 1.1. The increase was mainly due to increased expenses related to operating as a public company, as well as additional consulting, research and development, salary expenses. Okay, expenses related to operating public company and additional consulting. This is not good. Research and development is very good. But we need to know how much from 2.7 went to research and development. If it's 10%, it's very bad. If it's 90%, it's very good. We don't have the breakdown here. So income tax benefits was approximately okay, this is nothing. Net loss 3.4 compared to 0.3 million. The net loss was primarily a result of increased cost of revenues and increased selling and marketing, as we saw yesterday, as we just saw previously. So about Ezgo, exchange rate, safe cover. Okay, guys, so basically, yeah, the results are not as good as I would thought. I was thinking about I was thinking about 30 million with it. So I was thinking about 30 million sales and at least 1 million of profits. So we didn't get that. So I consider results to be so-so. So forward statements, they didn't say the estimates, what they will be. They just gave the guidance for the production, which would go from 80,000 to 200,000, which is good. But they didn't tell us what their expectations are for the next quarters or for the next year. Let's see how Ezgo is trading. Let's see how it's trading in the after hours. So 8.2%. I mean, going down below 1.2. I mean, of course, you can go down to 0, but I think that we will have more hard times. I mean, we can even go to 0.5. At the same time, markets can be irrational and or maybe, price the $200,000 of expansion in the next quarters. And if they manage to get their expenses right and get a margin from this e-bike selling business, that would be very good. If they manage to turn it into a profit and have at least $500,000 of profit on 50 million sales, at least, then the price could go up to 3-4. But right now, I don't see it going even to a $2. But I might be wrong. That's my speculation. Anyways, guys, thank you very much for following, and tell me if you want me to do other financial report breakdown and such as maybe Visa, Apple, and others. Just tell me if you would like me to do that, and I would gladly do it. See you, my friends. Please follow, share, like, and comment. Thank you.